Let's talk about convertible term insurance as it relates to infinite banking. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. For today's installation of our EncycloMedia series, we're going to discuss convertible term. Now let's start with it being a term insurance. So typically you could have this term insurance for 10, 15, 20, 25, 30 years, those types of increments with mutual life insurance companies. So as a term type of insurance, it will have no cash value, does not build cash value, and you can obtain a relatively significant amount of death benefit for relatively insignificant dollars, but somewhat more costly than standard term, and it's because of the convertible option, of course. So depending on the company, the convertible term insurance is you being able to pay term-like premiums for a policy that can convert into a whole life insurance policy, either depending on the company, in part or all at once. Meaning if you had a $500,000 death benefit and you wanted to convert $200,000 of that death benefit into a whole life policy, number one, it could be at that point structured as an infinite banking style policy, meaning structured for a high cash value. And of course, this should all be done with a mutual company that pays dividends. But you could do a portion of the death benefit from the term policy at a time or all of it, as long as you're in that term, and of course, subject to whatever the conditions are of that particular contract with that particular company. But if you had a $500,000 convertible term policy, perhaps you would consider converting 100,000 at a time, or 200 or 250, do half now and do half in 5 years, whatever makes sense for your plan. So again, all of this is just supposed to be good information for you to be aware of and learn and understand, so that you can sit down and have a conversation with a practicing professional. I happen to know a really good one. But you can use this, of course, in conjunction with your plans. It should be custom built for your intended purposes. But that convertibility of the policy is in force for the duration of that term policy, whether it's a 10-year policy. During that 10 years, and if there are any other stipulations, you can convert part or all of that death benefit to whole life insurance. So it's a way for folks who want to implement infinite banking, who either have tight cash flows now, can go ahead and, while they're younger or healthier or just sooner, can begin to lock in their insurability, lock in a death benefit that's appropriate for them for relatively less significant premiums, and then strategically transfer or convert, of course, part of that term policy to whole life insurance when it makes sense for them. Also, folks who right out of the gate are getting properly structured whole life policies with mutual companies that pay dividends to implement infinite banking may also want to get convertible term, because they may not use up all of their available death benefit, meaning if they could be insured for $10 million, and they're getting a whole life policy that insures them for $2 million or $5 million, they may want to get a convertible term policy. And I'm just throwing out some numbers. Move the decimals left to right. Focus on the principle here that I'm conveying. They may use a convertible term policy to go ahead and lock in the remainder of that available amount of death benefit that they could have on themselves, but it would give them time to be able to convert that policy in part or in whole to banking style policies, again, strategically when it makes sense, in scale. Again, let me reiterate that convertible term insurance can allow you to lock in insurability while you're younger, healthier, and just sooner. Now, with a convertible term policy, it would be typical for you to go through the same underwriting that you would for a whole life policy, meaning a full medical screening, such as you would have with a significant whole life insurance policy. So that would allow you then, again, to do the medical and the underwriting while you are younger, healthier, and just sooner, for all the reasons that have been mentioned. So this particular type of insurance, the convertible term insurance, is a great addition. It's a great asset to be aware of for you to be able to mitigate risk at relatively insignificant prices relative to the death benefit that you can procure for yourself, and with a contractual right not to have to undergo medical underwriting in the future, but to go ahead and have that contractual right to be able to convert that policy to a whole life insurance policy in the future according to the terms of that contract. I wish I had understood and been aware of first, and then understood convertible term earlier myself, as now I can incorporate this into my plans in implementing the infinite banking concept myself. But I hope that this has been helpful. If you'd like to have a conversation with me about how to implement the infinite banking concept and what that could look like for you in your household or your business or your investing, then don't hesitate to reach out to me at durhamtalents.com. This has been a great pleasure. I hope you have a great day. Take care.